as well as a CNBC contributor. And Tom, there's not a huge dip here. We're talking about declines of 1.5% or less for the major averages at this point. Is that the dip you're talking about, or you think there's more overreaction potentially to come?
Overnight, it was actually, I think when futures opened, it was almost twice the decline. So the small caps were down 4, NASDAQ down over 3. It's good to see sort of markets are catching their breath. It's the second Monday shock, right? Last week was DeepSeek. Right. But I'd say actually it's almost a victory that if we open only down 1.5%, because I think there was quite a lot of panic over the weekend.
Yeah, look, the market to this point has kind of operated on the idea that this is a negotiation that's taking place, that these tariffs, if they are implemented, won't last for long. Is that your thought process as well still?
Yes, I'd say there's decent odds that, let's say we go 3 months out, that the tariffs will be rolled back because concessions were received. And there are also other mechanisms in place to sort of protect markets from the downside. I know people think this is an unlimited risk scenario for stocks, but if the tariffs come into play and other countries go into recession, those central banks will be easing, which will actually improve liquidity. So I'd say that as bad as things look, I do think there's downside protection.
Now, look, that's a really interesting argument. Basically, he's saying, hey, if tariffs go into place, other countries can go into recession, which, by the way, JP Morgan came out with some data today, and we'll talk about them a little bit more later. But they said there is a very strong chance that Canada and Mexico both go into a recession very soon if these 25% tariffs don't leave in the next couple months. So JP Morgan's research came out today and said, yes, Canada and Mexico could easily go into recession. Now, Tom Lee's argument is, well, central banks inside of those countries will have to start quantitative easing, aka money printing, in order to save them from a recession, which is good for liquidity globally. But if they're in a recession, they're in a recession. That's not good for the broader stock market. So although I think there's an argument there about why that'd be like good for liquidity and probably good for different risk on sectors of the market, two of our biggest trading partners being in a recession, I don't think would be bullish for the United States.
What do you think our central bank will do in reaction to this? Because President Trump a week and a half ago, or a week ago, weeks go by so quickly, maybe it was 2 weeks ago, said that he would like to see our central bank, along with other central banks, ease rates. Our central bank did not really seem to go along with that based on the numbers and the inflation data that they've seen.
Well, for the Fed, they'll have to tread carefully because in the short term, would be an inflationary impact. Mm-hmm. It may not change inflation expectations, but it's going to be realized inflation. So I do think it makes sense for the Fed to actually tread carefully. But if I was a central banker in a country that got hit with tariffs and they're getting pushed into recession, of course they'd be easing.
You know, I think the market looks at this and thinks, well, President Trump likes a strong stock market. He likes to see those numbers on a daily basis. And maybe there's the sense that he will not get too stringent with things if he thinks that there's a big impact in the market. Do you think that too?
Yes. I mean, I think ultimately the goal of the President Trump is to make the U.S. stronger, both companies and the economy. There may be some short-term pain, and it's hard to tell how much of this is an investment in improving U.S. competitive positioning. I think it is kind of a test of resilience right now, and the fact that we're only down 1.5 percentage points mm-hmm. on pretty major universal tariffs is actually a sign of resilience.
A sign of resilience, or a sign that we don't think it's going to continue? I guess that's my question.
It's hard to tell at the moment, but usually the market overreacts. So if this is the first reaction, I would probably guess that the second reaction is pulling back from some of that decline.
Can I just ask you, it's both a sort of a combination market meets policy meets politics moment, which is, there's a sense in the market, I think, that this is some negotiation, something happens quickly. I don't know how quickly, though, we're talking about. And then the second order effect, not a second order, maybe first order effect is Americans like myself who love avocados. And right, when my avocado, I'm not joking. When the avocado costs, so much more than it did before, and not just avocados, but name, all this stuff that's going to happen in the supermarket. And I imagine
there are a lot of vegetables and fruits
in the next week, right? Like this is going to happen. Right. And then the question is, what kind of political pressure there's going to actually be on President Trump when the American public starts saying, I'm at the supermarket and this is not working for me? Or do you think that the American public is going to say, I'm willing to accept this pain I have my
No
Super
more
Bowl party.
avocado
I'm at
toast?
my Super Bowl party, but I can't have all this stuff. Like, is that going to be okay? Because I remember being on TikTok during the Biden administration when people would go on from the supermarket and, say that the world was coming to an end because, eggs cost what they cost. So what say you?
I do think Americans vote with their wallet. So if they're feeling the pain, just like when they feel pain at the pump, it does affect confidence. And I think if people are feeling in their wallet what they have to pay, and many Americans actually don't have an ability to absorb all these huge costs. So I think you're going to feel the pain.
Do you think the companies absorb the pain? Or do you think, that's the other thing about inflation, which is sort of an interesting thing. There's been these moments where some companies have absorbed the inflation. Some companies have actually done the exact opposite. They have exacerbated the situation because they said, well, look, if everything's going up, we should actually
they have to raise their costs.
We got to get ahead of this thing now.
That's right. Greedflation was, I think, a bigger problem before. I think there is a lot more pushback, and it's going to be tougher for companies to pass on prices. But I'd also, take some of the executive order at face value. This isn't really about rewriting all of trade practices as much as it is trying to get Canada and Mexico to talk about the flow of illegal drugs and illicit chemicals, et cetera. So,
well, to be honest, he has to have that. He has to have a crisis at the border because otherwise it is Congress's place to raise tariffs. If it's an emergency situation, then he can declare an executive order. He says Europe is going to be next. What's the emergency that we say is the reason that we're raising tariffs on Europe?
Yeah, and maybe that's when the market will actually push back as well.
So that's what we got from Mr. Tom Lee, essentially making the argument that, hey, kind of the same thing I was talking about last night, which is like Trump doesn't want this to last forever. And everyone knows, like, it doesn't take a rocket scientist to figure out that Trump knows that this stuff is bad. And although there might be leverage that America has over Canada and Mexico, it's still bad for everybody. Therefore, a resolution would be better. And Tom Lee's argument is that he thinks a resolution comes quicker than later. I agree. In fact, a resolution could come today. I mean, like, there is a world where Trump scares the entire markets for the past 48 hours and then boom, gets a regulation or gets a resolution and kind of looks like a hero going into the end of the day. So, I mean, I don't know how this is going to play out, but I do agree with Tom Lee that there's a hell of an argument that this is not going to last for a long time because everyone knows, especially the market, that this is not beneficial for anyone. And if it's not, you got Trump, who obviously does care about the markets, probably wants to get a resolution soon. And it's just a question of what does he want out of this? I don't exactly know. I think there's some theories on what he wants. A lot of Trump's people have said it's about the border, it's about fentanyl. I think that's true to an extent, but I think there's something deeper that they want out of this, which is why they're being so aggressive with this 25% tariff. And they're not even using it as a negotiation tactic anymore. They've signed it into law. So that, like, it's not just like, hey, we're going to do it. It's like, we did it, and now we want to talk. And if we don't talk and come to a resolution, you're going to feel the pain of it pretty soon. So it's aggressive. It's a very, very aggressive tactic. And either it's going to be, as someone says right here in the chat, a savvy business move, or it's going to be one of those things that leads the markets to selling off pretty aggressively coming into the future. Now, a couple of things on tariffs as well about this. Trump did do this before, right? January 2018, for those that don't remember, he did indeed launch tariffs, and the effect on the S&P was not pretty. It was relatively ugly. Eventually, we recovered, but there's a chart from January 2018 to January 22nd, where he started imposing steep tariffs on imported solar panels and washing machines. That was the beginning of the Trump tariffs, particularly from manufacturing that was happening outside of the United States. And we saw some pain on the S&P. Now, granted, that pain was we were able to recover from that pain, but it was indeed pain. And I think the markets are just trying to figure out, hey, we're in a bull market right now. 2018 is not like 2025 with the level of earnings growth and the level of technology innovation via AI that we're seeing. So this is a market that theoretically should have the ability to not only benefit from deflationary effects of AI, but also the massive productivity gains that AI is promising. And if we can get there, then this is a market that should be higher for a long time. But if there's these macro headwinds around tariffs that start to take away from the fabric of what the bull market is constructed off of, which is this ability to keep innovating without having any massive hiccups, well, this ends up becoming a massive hiccup. And if it ends up becoming a massive hiccup, it's obviously not the best thing for the broader world. Now, here's the stat I think everyone should focus on if you haven't heard of this stat yet, because this is what kind of defines to me the purpose of the United States' negotiation tactics in this tariffs debacle, which is that Mexico exports to the U.S. as a percentage of their GDP are 35%. Over a third of Mexico's GDP is exports to the United States. Canada, over 1/5, 22%. 1/5 of their GDP is exports to the United States, meaning if they don't get to effectively export to us, meaning we buy their shit, then their GDP takes a massive, massive tumble. This is why JP Morgan came out today and said there will be a recession in Mexico and Canada if these tariffs continue to stay in place. Now, Goldman Sachs also came out today with a research report and said, we don't think these tariffs are going to last for that long, but nonetheless, that would be the impact of them, theoretically, a recession if they did last. Our exports to Canada as a percentage of our GDP, 1.5%. Our exports to Mexico as a percentage of our GDP, 1.2%. So obviously, from a negotiation perspective, they send us a lot more stuff than we send them. And if we stop taking their stuff, or people in the United States start buying American, or in general, they don't want to sell to us anymore, they're going to have to find new partners to sell to. And if no one else is buying their stuff, especially if no one else is buying their stuff, given the lack of costs, pricing power that they have on it now, that could obviously hurt broader GDP growth. Is it going to hurt the United States as well? Yes, of course, because if we are getting water bottles for a cheap price from Mexico, and now we have to buy water bottles in the United States, does that mean we're buying American? Yeah, but that also means that American water bottles theoretically would be more expensive, which would be bad for the consumer, and they would have less purchasing power. So there's a lot of different downstream effects of this that are not good, but that is kind of Trump's point around why it needs to be painful in order for there to be any level of progress. Here's what he said last night on the concept of why he's being so aggressive with tariffs in the first place.
We may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that. We're going to change it fast. We're going to make America great again. We have to focus on our country. We have tremendous potential if properly used, and we have to focus on our country. Tremendous deficits with China, tremendous deficits with the European Union, tremendous deficits with Mexico and Canada. And why? What's the purpose of that? Why would we have deficits? And you look at, if you look at pharmaceuticals and drugs, if you look at various products, it's much cheaper in other countries. We're not going to allow that much longer. We're not going to take it.
And this is what Trump said about Canada last night as well.
They don't allow our banks. Did you know that? Canada does not allow banks to go in. If you think about it, that's pretty amazing. If we have a U.S. bank, they don't allow them to go in. Canada's been very tough on oil, on energy. They don't allow our farm products in, essentially. They don't allow a lot of things in, and we allow everything to come in. It's been a one-way street. We subsidize Canada by the tune of about $200 billion a year. And for what? What do we get out of it? We don't get anything out of it. I love the people of Canada. I disagree with the leadership of Canada. And something's going to happen there. But if they want to play the game, I don't mind. We can play the game all they want. Mexico, we've had very good talks with them. And this is retaliatory. This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada. And we're not going to allow that. And by the way, we have among the lowest numbers we've ever had of people crossing our border, the lowest numbers since my administration.
So that's what Trump said last night about this entire situation. It was a impromptu press conference that he gave after he got off Air Force One. Here is how Justin Trudeau responded early yesterday morning about these tariffs.
Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives. Like the American tariffs, our response will also be far-reaching and include everyday items such as American beer, wine, and bourbon, fruits and fruit juices, including orange juice, along with vegetables, perfume, clothing, and shoes. It'll include major consumer products like household appliances, furniture, and sports equipment, and materials like lumber and plastics, along with much, much more. And as part of our response, we are considering, with the provinces and territories, several non-tariff measures, including some relating to critical minerals, energy, procurement, and other partnerships. We will stand strong for Canada. We will stand strong to ensure our countries continue to be the best neighbors in the world.
All right, that's what we got from Trudeau, who is retaliating against these Trump tariffs. Look, at the end of the day, I think this gets resolved soon. I mean, I don't think this is going to last for a very long time. NVIDIA right here down 3.56%. One thing I will say is from the research I've done over the weekend, because last week I was a DeepSeek expert and this week I became a tariffs expert, is that the inevitable result of tariffs to me, again, from the research I've done, and maybe there's other research I haven't looked at, is that the consumer is going to front the bill. The consumer is going to front the bill. So I get Trump's argument about not wanting to take advantage of and why he's acting in this way and being as aggressive. I get it. But the downstream effect inevitably is that you and I have to end up paying the extra costs because of these tariffs. And I think there's very few situations in which you and I don't pay those extra costs and those costs get passed on to someone else. It always comes back down to the consumer from the research I've done. And if that's the case, obviously, that's inflationary. That at least has the potential to become inflationary. So I think you really have to weigh how much are we subsidizing Canada, Mexico, and China right now? How bad is that on our deficit versus how bad the inflationary spiral could happen as a result of instituting tariffs? Now, one of the things that makes this very nuanced right here is something that we found out last night, which is about, well, actually, a lot of people knew this, but this became a lot more popular last night, which is about some certain loopholes that China, de minimis, is the name of the loophole that China is able to get out of. So companies like Shein and Temu are able to get out of paying taxes to the United States if the value of each package that they ship from China to America, of a lot of the cheap goods that they have, are under $800. So my sister, for example, that ordered a Shein package over the weekend and then we got to her house, I don't think she spent $800. Maybe she was close because she got a lot of clothes. Shein did not have to pay taxes on any of that into the United States with Customs and Borders Protection because of the de minimis regulation or the loophole that's been around since 1930 in the United States. So H&M, which is a European manufacturer of clothes, they have to pay this. Gap has to pay $700 million. H&M paid $200 million. Temu and Shein paid zero. So Trump does have a point, which is this shouldn't be happening. Obviously, there's no reason for why companies like Temu and Shein, which don't have the best products in the world, are flooding our retail markets with cheap and crappy, potentially toxic goods and not paying any taxes on top of that. But then you have to weigh that against the idea of, okay, if they didn't have those cheap goods in the United States, what would that mean for American jobs? And what would that also mean for the American consumer that would then have to start buying certain items at more expensive prices than what they're paying from Shein and Temu? And so it's very nuanced. There's not a definitive answer that one side is right, one side is wrong. There is definitely an argument for increased tariffs, but there's also an argument for how do we implement those tariffs or at least deploy those tariffs in a way that doesn't cause more inflation in a world where inflation is finally starting to normalize. The reason the 10 years from 4.8 to 4.5 is because the market believes that CPI is going to come down because shelter inflation is coming down, automotive inflation is coming down, energy inflation hopefully will come down with more drilling. And core PCE on Friday came in with expectations in line at 2.8%. So when in a world in which inflation is already kind of under control, it's not amazing, but it's getting there. Having tariffs just creates another whirlwind that I don't think anyone's ready for. And I think that's what the market's trying to necessarily figure out the implications of long term. Now, what's also really important about this is we've got something going on. Yeah, here we go. For this headline I just saw, Trump just spoke with Canada's Trudeau. Okay, so let me pull this up real quick. Let's see if Trump tweeted that. And let me pull this up real quick. Give me 1 second, guys. Let me pull this up. Okay, 1 sec. Let me pull this up. This is right here. Yeah, it looks like Trump said he's speaking with Trudeau just now. We're just getting that in. Let me get that headline right here. Just spoke with Canada's Trudeau. We'll speak to Trudeau again at 3 p.m. All right, here we go. Here we go. Here's the headline. Just spoke to Canada's Trudeau. We'll speak to him again at 3 p.m. Wow. There you go. Okay, so the meeting already happened, and the meetings happen again at 3 p.m. And so my gut feeling here is they're going to come up with a resolution. Maybe I'll be wrong. But the fact that they're speaking again at 3 p.m. to me means that the discussion was productive 20 minutes ago, if they had it, and that they're going to continue the discussion going into 3 p.m. Here is the chart right now on Webull. Do we have the broader markets reacting to this? We're still down. Small green candle there, nothing too crazy, but we are still down based on that. We are still down based on that. Huh. That is interesting, dude. A second meeting within a couple hours means that there was something productive that happened in that first meeting. Either that first meeting went horrible and they're like, all right, let's just talk later because we're not coming to a resolution, or the first meeting was good and they're like, all right, let's talk later because maybe we can make some more progress here.